Hi, I'm Jessica Ehler with Price Mortgage and the Ehler Lending Team, and today we're going to do the Women's Growth Series on student loans. Ladies, would you like to introduce yourselves?
Sure.
Hi, I'm Michelle Dugan. I am the broker owner of MS Lending in Mississippi, and we do a lot of student loan stuff for our mortgages.
Hi, I'm Brittney Sargent. I'm a mortgage broker with the Top Lending Team. That's all I got.
That's all I got. Okay. Well, today we're here to talk about student loans, and I guess first to kick it off, I'll just ask you, ladies, do you see student loans preventing people from getting mortgages right now?
Absolutely. It's something that's been a huge, I wouldn't say problem, but it's been a huge hurdle for a lot of borrowers to get over the last several years when FHA did go in and make changes and they were making you use 1% of the balance or whatever's reporting on the credit report. That was certainly a hurdle for a lot of borrowers. So as of Friday, we have some really great news as far as that goes, and it should start to get a little bit easier for these borrowers moving forward, which I'm extremely excited about. So.
Definitely. Yeah, and I think a lot of it is people don't realize that it's going to be a problem too, because they think, hey, my student loans are in deferment, my DTI is great because I don't have to pay them. So that's always a conversation to have with a lot of the first time home buyers and people that don't know that would affect their pre-approval.
Definitely. Now, how do you see it affect the mortgage process in general? Like, are you able to pick the loan program that works best for the student loans? Are you finding that that's really hard? Like if you're in between FHA, conventional, how is that working?
I know for me in the past, if we had a strong borrower and they were able to go conventional, their guidelines were always just a lot easier when it came to student loans as far as what you had to use, if you could use what was reported on the credit report, how it impacted things if the loans were deferred. Over the past year, it's been really interesting because everybody's loans were deferred. So even if they were paying them back, you had a whole new hurdle to jump over that a lot of borrowers just didn't even realize was there. And then so now with FHA making these new changes, that's certainly going to be easier. One problem that I think is kind of a big problem nationwide for anybody who takes out a student loan is that, yes, you have to go through all these counseling. You have to answer these questions, fill out a short little survey anytime that you take out a student loan. But what they don't tell you is the true implications of those student loans once you get out of school. So you have some borrowers who don't have the fortune of having parents that help them with their schooling, and they don't, maybe they don't have savings, they don't have scholarships. So they're forced to essentially take out student loans, but nobody's really telling them what's going to happen once they get out of school, and then they try to go in and buy a home, and now they've got a great job because they went to college, but you've also got some students end up with massive student loans. And to me, that's where the education should be starting, is on the front end, not once you call your mortgage lender, because it's a really unfortunate conversation to have with a lot of those borrowers that are not expecting to be told, I'm sorry, even though you don't actually have to pay these back yet, you're not going to be able to buy a house because of it. So I think that education should really start a lot sooner than the first phone call to a mortgage lender. I mean, what do you think, Brittney? Is that something that you see a lot of as well?
Oh yeah, absolutely. I think, yeah, because people think that they have these great paying jobs, they don't have to pay their student loans, so they think that they're golden because their realistic budget that month or for the foreseeable future is great. But I usually have to explain that, well, probably over that 30 years or 15 years or 20 years or whichever term you choose, at some point you are going to have to pay those. So the lender is going to factor that in, because at some point during the mortgage, if you don't refinance, which is not guaranteed, you do have to pay that. So we have to factor in more worst case scenario options too. Even though supposedly their job is going to be paying well and continuing to pay well, we got to go with what's on the plate right now.
Yeah, definitely. Now, when your borrowers come to you and they ask you if it's smart to purchase a house while they have, especially a high amount of student loans, how would you respond to that? Is it more of a debt to income ratio thing? What would you say?
I think a lot of it, yeah, is your debt to income ratio. My conversation that I usually have is usually that not all debt is bad debt. It's good to leverage it, especially with rates being as low as they are now. Having the debt is totally okay. I mean, this is going to be some of the cheapest money that you're going to get in a long time. So, I mean, I think it is smart to pay as little down as possible, take out as much as you can, and use that liquid money that you have towards growing other things or paying off debts that maybe have higher interest rates or things like that. I don't think that paying off your student loans is something that you have to do in order to get a mortgage. Obviously, nobody wants to be in debt, but it is okay. And I think that that's something that a lot of borrowers I talk to have a hard time accepting, that it's okay to have debt.
Right. And the unfortunate thing is that there are people out there that do teach you need to have all of your debt paid off before you purchase a home. And by doing so, then you aren't building up equity during that time frame. You're throwing away money on rent. And just like you mentioned, Brittney, with rates being as low as they are today, it is something, you know, if you have the opportunity to be able to get into a home, you can start, you know, building towards your own future. You're paying a mortgage that's going to help you, not your landlord or wherever you're renting. A lot of people end up being able to purchase a home and their payments end up less on their mortgage than they are, you know, to pay rent. So I certainly don't think that any borrowers need to wait unless there was something else going on in their DTI that they weren't able to purchase at that time. But I don't think that debt should be an inhibitor by any means, especially not student loan debt, because that's debt that you've taken on to better your position in society with having a college education and stuff. And so I don't think that people need to wait, but there is a lot of confusing information out there because there's some really big names in finance that do, you know, certainly say, hey, you need to pay off all of this before you go purchase a home. But what if it takes you 10 years to pay off a student loan and then you have 10 years that you were renting from someone else? That's just, to me, that's really bad financial advice. But I don't always see eye to eye with, you know, all of the financial gurus either. So.
Yeah, and one thing that I definitely wanted to touch on is the different programs that we have and the calculations for student loans, you know, something to help other brokers out. I know when I started, one of my very first loans I didn't calculate the 1% in for FHA because the credit report didn't have it on there. So that was a bad mistake. We all, you know, I think have been there once, but you know, if you ladies could break down how you're calculating payments for VA, FHA, conventional, you know, Freddie Mac, to help everybody out there that maybe doesn't know all of the different guidelines.
I'll start. So I do a lot of VA lending. So of course I love their guidelines when it comes to student loans, because if it's reporting on the credit report and you're paying it back every month, then you can use whatever that amount is. If it is not and it's in deferment, then we have to take 5% of the balance of the loan and then divide it out over 12 months, which actually gives most borrowers a pretty affordable payment that we can use for that. So that's really been helpful for a lot of my VA borrowers. When it comes to conventional, you know, I'm not going to tell somebody, hey, your loan's in deferment, but you should take it out and put it back into repayment. But for some borrowers, it makes sense because they can put it on a payment if they're doing a conventional loan, you know, and they can put it on a payment that's affordable for them. It's something that they can handle in their monthly budget, but it's far less than either the 0.5% or, you know, the 1% that FHA was charging as well. So the conventional guidelines have been pretty friendly, I feel like, for student loans. And, you know, over the last several years, Freddie Mac has always been a little bit more, I guess it's been a little bit more generous as far as what we could use for the minimum payments. So for Fannie Mae, they would allow you to use, you know, what was on the credit report or 1% of the balance. Freddie Mac was a little bit more generous because they would allow you to use what was reporting on the credit report or 0.5% of whatever the student loan balance was if it was, you know, in deferment. FHA has always been 1% or whatever was reporting, or they have this one little loophole that you could use where if the loan was going to fully amortize over the life of the loan, then you could use that amount as well. So I did definitely use that for some borrowers to help in the past, but now they have essentially taken basically the same guidelines that Freddie Mac has, to where we only have to use, we can use the 0.5% if it's not reporting or if it's in deferment. So that's going to be huge for a lot of FHA borrowers, because it's essentially going to cut it in half. I mean, I know I have a couple right now, and I'm like, I hope they don't find out, because they may not want to purchase this home, because they probably could have purchased one that's a little bit larger. But it's going to be really great for a lot of them, because the truth is, a lot of these people too, they're not paying 1% of their student loan balance. Most people never do. And with all of the new stuff too, having government guidelines or these government jobs where after a specified amount of time, they're going to forgive the loan. Those are the ones that it really hurt the worst too, because they may have it in deferment. They may have it on a, income-based repayment plan where it's 0, which is completely okay by the plan. But then for us, we have to use these huge balances, even though the loan's going to be forgiven down the road. And so they were really kind of hurt in more than one way because of that. Brittney, you want to jump in here and talk about some of your experiences too with this?
Yeah, I think, like you said, the ones that they know that it's going to be forgiven eventually, that's not as motivating for them to take it out of deferment, because their plan is to not pay it at all. For I know a lot of like nonprofit organizations or government ones, like if you work there for 10 years, they'll pay your whole student loans for you. So people don't want to start paying any of that, because why would you when someone else could pay it for you? But yeah, I've always suggested people that before they implemented the new 0.5% rule, people taking a look at income-based repayments, or sometimes consolidating student loans, because sometimes when you consolidate them all into one, they can give you different repayment options, so that your monthly payment reporting is lower than the percentage or the 0.5% that we would have to use. So there's a couple different ways to kind of play around with it and get a little creative to figure out which option is going to report the least amount of debt that we have to use towards your debt to income ratios.
Yeah, that's awesome. Now, do you have any other advice on, helping brokers best serve their clients that have, that are struggling with student loans? Any tips or tricks at all?
Well, I think right now is the perfect time for any broker or lender in general just to go back through your old through your database and look and see who you weren't able to help in the past, because maybe they did need to be able to or they did need to go FHA for their loan, but they weren't able to qualify because their student loan payments were higher. Right now is the perfect opportunity to be able to go through those loans, figure out who's going to be in a better position to buy now, and be able to call and give them a little bit of good news. Whereas before you might have had to say, hey, you're going to have to wait until, one of these things happen, or we can get you into a conventional loan. And so I think it's going to open the door for a lot of people that had, recently or previously been shut out. And I think one of the things that FHA said in their guidelines was that a lot of the people that this is going to help are, it's people that may have kind of struggled coming up. They didn't have a lot of family support. I know that in my business, I tend to see that align with, if people have taken out a lot of student loans, they typically don't have like the best information that's coming down to them from like parents or whoever may have raised them or is kind of advising them through college. They're not necessarily telling them, don't take out these student loans. I mean, the unfortunate part about student loans is that they will give you so much money that you can have, and it's over and beyond what you actually need to go to college for that semester. And so you have some students that don't realize that you can say, hey, no, I don't want to take that much money. And they just take as much as they can. And they get out of school with a ton of debt that they never really even should have borrowed to begin with. But they just had, poor information that was coming to them initially. And so I think that for a lot of these borrowers, this program is certainly going to help. I'm really excited about it, especially here where I live. We've got just a lot of people that we're going to be able to help with, with all the new changes. So I'm certainly going to be going back. I've got my assistant who's going to be, going through and looking into our database and who could we not help in the past that we can help now, and reaching out and making those phone calls, because there's never been a better time than right now to be able to do that.
Exactly.
Oh, definitely. Yeah, I think a lot of what we do is just educating people to what options are available, because a lot of like the financial side of stuff is not taught anywhere. I mean, like balancing a checkbook, or not that we have those anymore, but like just balancing your bank accounts or checking your bank accounts, figuring out what you should borrow, like you said, is not something that's talked about at all. We don't talk about consequences of loans and debts and things like that, and what other options there are to kind of maximize the debt that you're bringing on and maximize the minimum payments that you could have. And like just having a financial representative like what we do helps, because people don't know what they don't know. So even for like this 0.5% is something that it's brand new. I haven't seen hardly anything about it, being advertised. It's something that I know because of emails that I get from our reps and stuff like that. It's not something that is commonly known. And one cool thing is that we don't necessarily have to wait until August. A lot of it's lender based. So potentially some of the lenders that we're using are implementing that right now. So we don't even have to wait the next couple months. So it's pretty exciting news for people that have quite a lot of student debt.
Yeah, do you know of any of those lenders? I'm pretty sure that I saw that Home Point is starting it now. Have you gotten any other emails? I know that it's like new. I think it was as of Thursday or Friday last week. Have you heard anything
Loan
about that?
Depot is planning to make an announcement too.
Yeah, I would anticipate that we'll probably have a lot of announcements made early this week, because as soon as one person starts doing it, I think that a lot of people are going to start to follow suit, just because you don't want to be the last one in line, because you stand to lose a little bit of business between now and then. But I think that, like I said, I think that we'll start to see a lot of that come out. But Friday, like all the information rolled out so quickly. It was like all the FHA information rolled out. We had a brand new holiday. And so lenders were literally just like, oh my gosh, what is going on? Which one do I tackle first? So we had to get past the holiday and how that was going to affect everything this week. So I would imagine, over the course of this week, and especially the beginning of next week, we should start to see things catch up. And yeah, there's gonna be some great news for borrowers out there. On a completely different note, I'm gonna just kind of take a little sidestep here, Jessica. I know that as a lender, one thing with student loans that caught me in the beginning was if you have a borrower that has gone into default and you are not checking that CAVERS report up front, you could possibly have a credit report that shows no student loans, that everything looks like everything is all good and fine. Their scores may be great, but if you haven't checked that CAVERS loan and you're doing a government loan, it could backfire. I've had several borrowers in the past where the CAVERS just didn't get checked up front because everything seemed to check out and everything all looked good and fine. And then once we checked CAVERS, we found out that there were some old student loans out there that had not been addressed. And so having this program for some of those borrowers will be really helpful too, because, yes, they're going to have to take care of those loans. They're going to have to put them into some sort of repayment program, but they do have those. And then once they get out of those programs, if they are still continuing to repay them, then having that debt's not going to hit them nearly as hard as it would have in the past, where borrowers may not have been quite so encouraged to, take care of this old debt and tackle it. They think that it's behind them, but now I think it's going to give some of these borrowers a little bit more hope, and wanting to go ahead and take care of that now, because it is going to let them get into a home a lot sooner than they may have been able to in the past.
Perfect. I'm glad that you touched on CAVERS. It was on my list.
Sorry about that.
Another thing that I wanted to talk to you guys about was cash out refinances. We're seeing a lot of people say, hey, do a cash out refinance, take all of that equity and pay off your student loans. What is your position on that? I know that, some people say because money is so cheap, invest the money in something else, or pay off the debt. What do you think is the best course of action?
I think it depends on your total financial portfolio. So I would recommend paying off whatever has the highest interest rates on first. So calculate out which payments are going to cost you the most over time, or for however long you think that you're going to have that loan. So like a lot of people pay off car loans because they've got like 8%. But if your student loans, it depends on your situation too. I feel like it depends is the answer of the year for this industry. So it depends on how long you think you're going to have those student loans. Is your job going to pay them off soon? Are you almost at that 10-year mark? Do you have a lot of student loans? Are they in deferment? Are they in income-based repayment? Are you paying more than that percent, 0.5%? It really just depends on what debt is costing you the most. I do think that it is pretty smart to leverage your equity, because rates are super low. You're not going to get them a whole lot lower than this on any type of loan, whether it be mortgage or car or anything like that. So using that money to get the most out of that money, I think is stretching it wherever it needs to go, not necessarily just student loans. I feel like in most cases, it's probably not student loans that's going to be the most beneficial.
Yeah, and I think it just depends on it. It just depends. That is really a great answer. Some areas, people, they're seeing these rapid appreciation of, on the values of their home. And so for them, they may have a lot more room to be able to go and roll these student loans in and just get them taken care of. Because some people don't, they're like, oh, I'm just going to have student loans until I die. They really don't see any hope in ever getting them completely paid off. So for some borrowers, if they're in a market like Southern California, Arizona, Colorado, some of these areas that are rapidly appreciating, then it may make sense for them to go ahead and roll it in on their mortgage and just have a way to get it paid back. It's going to give them, it's going to free up that debt to income ratio. It's going to get those student loans off the credit report. It's going to give them a way to be able to pay it back that makes sense over time. And it's, paid back over 30 years. But to me, or 15, however long they, set up their loan for, but it's not something that I would really advise a whole lot of borrowers to do, just because you're taking a debt that you're only going to pay on for X amount of time, and now you're going to be paying on it for, 30 years, 15 years, 20 years, where before you may be looking at 7, maybe 10. But for some borrowers, though, just based on the balances and the equity that they have, it might be the best option. I know that I personally have not really used the student loan cash out option a whole lot, because for most of my borrowers, it just didn't really make sense in the long run. But I can see where it does for some. I know when it first came out, I was looking at it and I was like, hold on, okay, this is a government, student loans are already backed by the government. And then it's the government that's saying you can roll these into your home and pay them off that way. And I was like, is this just a way for the government to try to recoup that money from somewhere, somehow? But who knows? I felt like they were just kind of taking debt from one place and allowing them to put it to another, which essentially is exactly what they were doing. And it would, probably afford for less borrowers to default on them if they're paid off through their mortgage, instead of just having a loan that essentially is unsecured once it's, once school is out. So I totally see the reason why the government decided to go in and make these changes and allow it, but it's not a product that I've used a whole lot, because it just hasn't really made very much sense for the majority of my borrowers.
Yeah, I think one of the biggest signs that it does make sense, the private student loans, you're seeing them between 13 and 25%, and people can't afford those monthly payments after they get out. They didn't know what they were getting into.
Yeah, that's a much bigger difference than if you've got a student loan that's at, say, 4% or something.
Definitely. Well, is there anything else that you ladies want to add? Any tips or tricks or anything that you're seeing about student loans?
I don't think so. I think, in the past, the only tip or trick that I was using was with FHA, where they would allow you to use that fully amortizing payment. So I had some borrowers whose payments were set up over, they were in deferment, but when they were paying it back, it was based on a 25-year term, which is a long time, but it did give them a lower payment than the 1% that FHA was requiring them to use. So it was certainly a little bit of a loophole that not all lenders realized you could do, or they weren't aware of it, so that was certainly helpful for some, but now it looks like we shouldn't have to really worry so much with that anymore, since we'll have this other program. But I'm sure there's still going to be some borrowers, I don't know exactly what the language is going to look like once they have it all added. I haven't really dug into that part of, these changes yet, but I would imagine that for some borrowers, it's probably still going to be helpful to be able to use a fully amortizing payment, which is nice to have that option. So yeah, just don't make sure that you always check that if it's something that's needed. But should be I'm really excited about student loans and all that's coming over the next couple of weeks. This recording was certainly very well timed, and we couldn't have even predicted it. So
yeah. Brittney, did you have anything that you wanted to add?
No, I think we pretty much covered the basics. I mean, I'd say we did pretty good.
All right. Well, thank you ladies so much for being here today. And if anybody else has any questions, just drop them in the comments and we'd be happy to answer them for you.